From the sun-drenched farmers' fields of California to the cold tiles of Germany's abattoirs, around the world, poor working conditions have led to large outbreaks of COVID-19. It's put workers' rights under a spotlight, particularly for investors. In fact, in March last year, a group of 286 investors, representing more than $8.2 trillion in assets, called for companies to keep jobs, provide paid leave, and prioritize health and safety. Ethical investing, which weighs up a company's commitment to environmental, social, and governance issues, or ESG, has become one of the fastest growing areas of finance. It covers a range of issues, from the diversity of a workplace to its carbon emissions. Until now, companies have largely focused on the E because of the long-term risks posed by climate change. But analysts say this is starting to change, with a greater emphasis being placed on the S. There are a few different ways you could define the S in ESG, but broadly, it looks at the way a company directly affects communities or people's rights.
It could be privacy, freedom of association, freedom of expression, access to water, nutrition, labor rights, but it's a threshold. When you hit the level that it undermines people's basic dignity and equality, that's when we've got a problem. That's when companies need to be taking action. That's what we want to know about in the S in ESG.
The social issues relevant to a company depend on a number of factors.
If you are a mining company, it's quite possible you are displacing often poor and marginalized communities from their land. That affects their livelihoods, can affect their access to clean water.
If you are a retail company, you're going to be looking at wages, you're going to be looking at the conditions under which your employees or your contractors are working in those factory settings.
While the focus of the S varies, the underlying message remains the same.
We understand where the greatest risks for people are in connection with how our business runs and what our business is. And here is how we are playing our part in reducing those risks.
So, does focusing on social issues make financial sense?
The simple answer is yes. Studies have shown that managing social factors such as diversity and inclusion and human capital management have a strong investment case.
The market tends to reward companies that minimize their risk, as opposed to a firm that might use controversial products or an exploited labor force, which could end up hurting profits and increasing volatility.
If a company is treating their workers poorly, if they are fighting them, if they're cutting benefits, if they're putting them at risk, those employees are at a greater risk of going on strike, of having a work slowdown, of leaving and having turnover. And although those decisions to cut costs might make you profitable in the next month or the next quarter, they could lead to an erosion in the value of your company long term.
Some investors and companies worry that bringing in measures of social impact may have a negative effect on a company. But is that true?
Kenya's biggest bank today became that way because all of the big multinational banks that were in Kenya for years and years all said, you know, all of these social issues, this, that, the other, not our issue. We'll just focus on serving the upper middle class in the cities. These folks went in and said, well, there's money and transactions happening among the rural poor. And if we really focus on addressing them and also figuring out how do we anchor, provide scholarships for their children, provide them access to healthcare, et cetera, we'll build loyalty. And they built the largest depositor base, the most loyal customer base.
So how do you evaluate the impact of social factors? Environment and governance issues can be more straightforward to define because they're often backed up by larger data sets and more regulation. But social issues can be a lot harder to pin down and evaluate.
There are observations about the preparedness of an organization. How are they dealing with a particular issue? Have they identified the issue in the correct way? Have they formed opinions about how they want to deal with it? You first and foremost then form an opinion about a company operating in a particular industry, in a particular region, and you aggregate from there. And that makes it very complex.
Some companies have been able to hide behind positive public declarations about how they value their employees, their suppliers, and their communities. But statements like these are now being put to the test, as regulators are asking companies to disclose their impacts not just on the environment, but on society too.
It needs to move from voluntary to mandatory eventually. If you mandate this type of disclosure, you're taking care of very many issues, but availability of information and also quality of information, that's definitely key.
Nearly all stock exchanges around the world and many regulators now expect companies to report on at least some aspects of the S in the ESG, but there are big differences between jurisdictions.
Sometimes they focus on single issues. Some embrace certain international instruments, and others actually have a more holistic view.
There's a space for standard criteria that will really be just about weeding out bad actors. But I think the more interesting space is the less public side of how do you drive, true competitive advantage via applying a rigorous internal ESG lens.
Competition is king. And if your peer is outperforming you in the context of your wages for your employees or your diversity and equity data, then certainly you will start to take note of that.
The hope is that it will become easier to monitor and measure the S in ESG, especially through technological developments like satellite imagery or blockchain technology, and the ability to store and analyze large amounts of data. As trillions of dollars are pumped into economies around the world through COVID-19 stimulus packages, there's both a need and an opportunity to ensure that the protection of human rights becomes an integral part of the new normal.
This is not about pushing our personal values, but it's about seeking long-term value in sustainable companies.
Thanks for watching our video. Please let us know what you thought about it in the comment section down below, or if you have a question about ESG, write it down and we'll get back to you. Make sure you like and subscribe to our YouTube channel so that you don't miss any of our new videos like this one, which looks at how the circular economy can help us fight climate change.